The government has totally screwed up the housing market. Prices for homes have been artificially high for decades because of government subsidies. The government guarantees mortgages, and because of that, mortgages get made on much looser terms and get extended to far less creditworthy borrowers than would be the case in a free market. And in a free market, down payments might be 20%, but with the government, people could buy with nothing down or 3% or very low down payments. And in the free market, banks would be a lot more concerned about the ability to pay. But once the government guarantees the mortgage, no one cares if the homeowner can pay, because if he doesn't pay, the government will. So this has caused a lot of excess credit to be pushed into single-family housing, condos. People have bought homes that otherwise might have rented. And so more owner-occupied housing has been built than might otherwise have been built. We might have had more multifamily, more apartments, but the government, through subsidies, kind of pushed everybody into home ownership and pushed up the price of homes to the point that people were really stretching to borrow a lot of money to buy homes that they really couldn't afford. And so the market has been screwed up for a long time. But what really happened during COVID to screw it up to an even greater degree was that by slashing interest rates to zero and keeping them there, mortgage rates went down into the twos, and lots of people refinanced and now have these rates, super low rates that will never really exist again, locked up. People have maybe 28 years left, 25 years left on these mortgages, fixed rate mortgages. And they're never leaving these homes because that means giving up that mortgage, which is probably their greatest asset, but also the bank's greatest liability. One of the reasons that the banking sector is in worse shape now than it was in 07, 08 is because back then they lost money on defaulting mortgages. So the mortgages that didn't default, they were fine. It was only when the borrowers defaulted where it was a problem. And that was a big problem for a lot of banks. But today, it's not about default. It's about every single mortgage that the bank owns, because it's losing money on even the good mortgages because they're underwater. They have a mortgage that pays them 3 or 4%, but the Fed funds rate is over 5%. Somebody owns that mortgage and is underwater and is taking a loss. But banks still own a lot of mortgage debt, a lot of mortgage-backed securities, a lot of treasury debt. All of that is underwater. I mean, these banks are all insolvent, including the too big to fail banks. But the government lets them pretend they're not by not having to mark to market these massive losses, because they hide under the assumption that they're going to hold these investments to maturity, these mortgages and these bonds. But they may not have that luxury. If their customers need their money for whatever reason, they're not going to have it because they've lost it in the bond market. You have all of these homeowners now that have locked in these low mortgages. They're not moving. That means those houses are really off the market. And if you want to buy a house now, there's not a lot of inventory and there's not a lot of new construction because it costs a lot to build, with rising material costs, rising labor costs. And so people are stuck. Home prices are not falling, which they normally would with a big rise in interest rates. Like we've seen, mortgage rates have gone from 3% to 8%. You would expect a big drop in home prices, but that hasn't happened because the homes are just not for sale. For a lot of people, and this has been the case for a long time, renting is a better option. Now, another thing that the government has done, too, to push people into home ownership, which has helped screw up the market, is the tax consequences. The government gives you a tax write-off. If you buy a home, you can deduct your mortgage interest, but you can't deduct your rent if you rent a home. I mean, sometimes there's a renter's credit. Some local governments give that, but there's much bigger government subsidies for buying a home rather than renting. And so that's caused people who might otherwise have been better off renting to buy instead, because they're taking into account the tax benefits. But in the real economy, they should be renting. But in the economy created by government, they end up buying. But that distorts the market, and it leads to a less optimal decision because it's all based on taxation. A lot of people don't itemize their deductions now. They take a standard deduction. And so it doesn't matter that the mortgage interest is tax deductible. They don't get the deduction. Depending on, again, your circumstances, a lot of people are better off renting. A lot of people who own homes, the only reason they're better off staying where they are is because their mortgage rate is so low. Their mortgage rate may be so low that if they sold their home and rented, their rent would be higher than what their current mortgage is. Now, they are stuck with maintenance, insurance, taxes. All these costs are going up. So it's not like the cost of home ownership isn't rising with inflation. It is, making it even harder for people to buy a home today, because not only do you have to pay these inflated prices and then borrow at 7-8%, but you have to pay insurance costs that have basically doubled over the last few years. You have to pay much higher maintenance costs. You have to pay higher local property taxes. I mean, everything related to buying a home is a lot more expensive. And of course, if you don't buy a home, if you rent, rents have gone way up and there's no end in sight. They're going to keep on rising. Why would you take any money that you have and pay off a sub 3% mortgage? Plus, you get the tax write-off potentially for that mortgage. So the real effective cost is probably below 2. Why would you do that when, you could take that exact same money, put it in the bank, get 5%, and then use that to pay your mortgage and have money left over? Or you could do something more productive than a 5% investment. You could buy, dividend-paying stocks. Let's say the ones that we, manage in our portfolios. A lot of dividend-paying stocks are paying 7, 8, 9, 10%. Plus, the stocks could appreciate over time. They probably will. So, instead of taking that money and paying off your mortgage, buy other assets. Worst case scenario, you could always rent out the house, because you could probably charge in rent more than you're paying in mortgage. And so let your tenant pay your mortgage for you and keep the difference. Now, of course, you do have to pay property taxes, maintenance, insurance, but you can build all that into the rent. Generally, when you're young and have, no real roots anywhere, you don't know where you may end up settling down, if you may settle down, who you're going to marry, how many kids you're going to have, if you're going to have kids. Those are a lot of things that are important when it comes to, planting roots and buying a home. But one of the benefits of being young and being single is you can kind of play it by ear. You can go wherever the wind blows you. And why do you want to be tied down to a home? Sure, you can sell your home at a gain right now, but the market could change. Somebody could buy a house today and it's down. And it could take you months, maybe years to sell a house unless you're really willing to move the price down. Whereas if you're young, if you're single and you're renting, you can get out of a lease very easily. You get a job offer in another city, you meet a girl in another city, another country, and you can go, right? So it's like renting has a lot of perks when, you're single. And then you don't need a lot of space. You don't have the wife and kids, maybe do you have a pet?
Yeah.
So you can rent out your room and then you could leave and go where you want and just keep it as that's a little bit different when you're talking about it as a
investment vehicle,
cash flowing investment. And people have done that, sometimes college kids, their parents, well, let's buy a place and you can get some roommates and we'll make a little bit of money. But there are a lot of people that were pressed into home ownership by overzealous realtors who make a big commission. And then the idea that, I'm going to get rich owning home. Realtors kind of perverted the American dream into home ownership. Like, that's the American dream, buy a home and get rich, as if the home makes you rich. A house depletes your savings. It's a money pit. Houses are expensive. How much money I spend on this house, how much money I spend on my Connecticut house. It's crazy the amount of money that a house costs you. Now, people get bailed out because they think, the house appreciates. Not always. It's inflation, really. That's doing it. And all that's happening is the land is keeping pace. But houses don't. Even if somebody tells you, here's this house that I sold for $1 million and I bought it, 10, 20 years ago for $500,000. If you think about all the money they put into that house over that period of time, they may not have made any money. A lot of the houses too that were bought back then, if you don't redo the kitchens, redo the bathroom, put on a new roof, your audio-visual systems are all obsolete, the wiring. A lot of stuff has to be brought up to date in order to sell it for the $1 million. A lot of money was spent. A lot of these houses too, if they weren't updated over the years, they're considered a tear down. What does that mean? A tear down, people say, my house, a tear down means a house that was once brand new and had a lot of value, now has zero value. It's going to be torn down. The only thing that has value is the land itself. The house is worthless. I used to tell people during the housing bubble days, look, just, if you can rent for cheaper, then rent and take all the money you save and invest it. Open up a brokerage account, invest the money. Don't just spend it out. Don't just, buy a fancier car or take more vacations with the money you save by renting. Invest that money, right, in an actual investment. But inflation too has actually been higher than the CPI. So when people say housing's done 2 or 3% more than inflation, that's because we're not really counting all the inflation. So it's actually been higher. But if you look at what's happened to the dollar, ever since we've had the Fed, when the Fed came in 1913, you only needed $20 to buy an ounce of gold. Now you need almost $2,400 to buy an ounce of gold. So over that 100, plus years, the dollar's lost almost, 99.5% of its value. I mean, so everything is going to cost 20 times more when the dollar is 99% less valuable. So in terms of gold, houses, may not be any more expensive than they were 100 years ago, as far as how much gold you need to buy them. Although, now we're building bigger houses than we built back then, more square feet, more bathrooms, stuff like that. So there's more that goes into them than did back then.
Do you see housing prices going down?
In some markets, I think they will go down, even in nominal terms. But I think that there's going to be so much inflation that's going to continue to be created. It's going to be difficult to see a meaningful reduction in nominal housing prices. But in real terms, right, in terms of an ounce of gold, how many ounces will you need to buy the average home? There, I think you can see a crash in home prices. And I think you might be able to see the decline by just comparing the price of a house to what you pay for groceries, what you pay for electricity. There you might see, the house is actually a lot cheaper now compared to my grocery bill. But it doesn't mean that it's actually gone down.